Futures, crude oil futures was down over 1.5% on its lows, recovering a little bit in toward the end of the day. But we now have crude oil down 4 of the last 5 days since making that high in the $66 range on February 2nd. That was the second swing high. I mentioned the other day about the double top pattern that we see. That double top pattern target was reached, but crude oil currently below $61 and toward the end of the day, and that's a psychological level. Each round number is always a psychological level in the futures contracts. The story is still the EIA with inventories and U.S. production. The crude oil inventories in the EIA figure came out with a build, which was contrary to the API, but also the refinery runs have not moved up toward that 95 level, which is basically considered mass production. Refinery runs, as tracked by the EIA, 92.5%. That is not quite building up to the potential demand for the summer driving season yet. And then the production measured at 10.25 million barrels a day. That was a one-day record for the U.S. And again, the production estimates 10.7 or 10.8 and change for 2018 and over 11 million barrels for 2019, and all of that continues to weigh on the price of crude oil. And then on top of that, you've got dollar strength. 4th day in a row, the dollar index is stronger, and open interest, which is finally starting to fall. We've mentioned before that there were record longs in the crude oil from speculative buyers. Those longs are starting to come off as we're seeing open interest indicators fall. The next commitment to traders report should reflect that. So this is probably a little bit of excess in the fall. But again, we rallied in toward the end of the day. We'll see if crude oil finds a base. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.